Welcome to the Metals 100 coverage of the PDAC 2025 here in Toronto. So I am very glad to have Brian Leni here with us here today to talk about stocks and, of course, investing into mining stocks. How are you doing today, Brian?
Good. Thank you for having me.
Thank you. Nice to talk to you again. Have a chance. We talked last year, and I obviously wanted to revisit some of the topics that we talked about. And one of the main things, of course, how did you do last year in terms of your portfolio? Any good wins in your stock portfolio?
Oh, it was an excellent year, especially for a market that was going sideways. The junior stock premium portfolio returned over 150% on average. And what was tremendous return for a sideways year. And I think 2025 has all the markings to be even better. So I'm very happy.
So which one of the stock that we can recall that has the best, give you that sort of excitement?
The two at the top that really drove the returns were G Mining and Montage Gold.
Oh, yes.
Both were up around 300% return and drove the portfolio. And the key point was that I weight my positions, so they were heavily weighted to those two, and so those 300% returns made a huge difference in that overall average. But we had probably about 5 or 6 companies that returned over 100%, so it was a great year.
Great to hear. So that goes to the second question, because of the two companies you mentioned, a bit more later stage and not really early stage kind of exploration. So I'm starting to see more junior gold mining stocks in recent months. We talk about this disconnect with the gold price. Seems to be getting better. Do you see that in the last few weeks in terms of that I would say market valuation? More people seems to paying more attention to that?
For sure. In a rising metal price environment, so specifically we'll talk about gold, you're going to start to see the later stage, whether it's producers or late stage developers, really catch the market's attention. In a rising gold price environment, it's those companies with ounces in the ground that are maybe at a PFS sort of level that has a higher confidence level for an investor that you see money start to flow into. And that in respects, that's why the portfolio did so well last year. But I would say that what separates any companies or any of the investments you're going to make are sort of these X factors. With Montage, the big reason, there was nothing that really changed with Koné. The big thing that changed was that the Lundins decided to take a more public approach or showing of their appreciation for Koné and what they thought that was going to be in the future. Once they said, okay, we're going to change the management team, we're going to progress this to construction, the market was all in. In G Mining, again, the other play on people was the Gignac family. The Gignacs, of course, run both G Mining Ventures, which is the public company that I was invested in, but also G Mining Services, which is the constructor of open pit gold mines. Their specialty is open pit gold mines in the Guyana Shield, which is exactly where Tocantinzinho was built. It was the perfect recipe for success. And that's what I saw early on, and that's what the market was discounting. And so when they got into production, we see this very traditional thing that happens. All that risk that is associated with pre-production plays gets pushed right back up, and you see valuations go up to, NAV, like full NAV or above NAV. They get a premium. And this is what you saw in G Mining. And then they go out and they buy Oko West, and they've completely separated themselves from that lower echelon of the mid-tiers. And with Oko West going into construction with the two-year construction horizon, they're going to boost up into the top level of those mid-tiers and probably attract the attention from the senior mining companies and become another M&A target on the backs of those people once again.
Yeah, great to hear for those analysis. And last year, remember, we also talked about the election, because we haven't happened that. Now the election is over. Seems to be, we talk about more on the world before. Now it's more on the tariffs. Is tariffs getting more of the fear into the marketplace these days?
I think it is. Yeah. I think as an investor, I don't really care. I weed through that noise. I've learned over my career that politicians like to talk a lot, and it rarely translates into anything actually happening. In this case, I would say that if the tariffs do happen, it's probably a net positive. More chaos is typically very good for gold. Not only that, but if you look at restriction in the way that copper or some of these other base metals flow in the world, they get constricted. constricted supply is usually pretty good for metal prices, for copper prices. And I think inevitably, while people look at it maybe with some downside, what I think you're ultimately going to see is that there's lots of upside potential in what copper price could end up soaring because of all this chaos. So ultimately, it could be a good thing, but I don't count on it.
Yeah, to continue that conversation, you did really well on the gold and silver, particularly gold last year. Gold and silver, we also believe this will continue to go well. So any other metals this year that you believe we're going to do very well as well?
If you weren't going to concentrate on precious metals, I do think precious metals is where investors should be. But if you're not going to do that, I think you should be in the next biggest market, and that's copper. If you look at the investments that I've made in the newsletter in my personal portfolio, it's either been precious metals or copper. I think if you believe that society is headed towards electrification, if you believe that infrastructure needs to be improved, if you believe that the developing world is going to expand and grow just like the West has, then you got to be a copper bull. And I think while the copper has sort of languished behind the precious metals in the last 6 months to a year, I think we could be on the cusp. If you've looked at copper futures, they've been hovering up beside $5 a pound, and it's above $5 where you start to incentivize new construction, new development. And if you're invested in the right copper companies, I think that's a huge opportunity for investors.
Yeah, next question coming from some of our audience, because when you're talking about investing in the junior mining stocks in general, private placement is also a tool for them to consider. So in your own experience, in terms of how do you get into the private placement in terms of whether you choose to do that or instead of buying the open market, do you pick obviously you pick the right companies, but any specific things that you really worry about, the terms of the private placement, any particular things that you really look into in order to participate in the private placement?
Well, it all matters.
Yeah.
The fact is you have to consider what the price is, if there's warrants, what type of brokered deal is it, or is it brokered, non-brokered, flow through, is it a life financing? All of these things are meaningful to why or why not you might participate. It's also how you judge the management team. Does it make sense what they're doing? Are they raising enough money for what they say they're going to do? It makes no sense going out and raising $1 million if you say you're going to spend $3 million. Doesn't make any sense. And so if you can find dichotomies like this, those are probably opportunities that you want to not see as an opportunity and stay away from. You want to look for management teams they're saying we're going to spend $3 million, we're going to raise at least $3 million, and this is how we're going to execute it, this is how we're going to spend it, and this is why we've chosen to do a life financing or attach a 2-year half warrant. So you need to answer all those questions, and it becomes an individual thing. The other aspect to consider is if you're talking about Canadian citizens, accredited citizens, it's probably not a big deal and you can make that decision. If you're American and you're listening to this, you also have the attachment of a legend, and a legend is a restriction on trading. Considering my experience and my American friends' experience with legends, if you're an American investor, private placements probably aren't for you. While the Canadian investor gets held for 4 months and a day, legend can take a further 2 or 3 months to remove. And to me, this is a huge consideration for an American investor looking at a private placement. And more often than not, no matter what the deal is, I think you probably want to avoid it. Try to buy it in the open market, but buy your shares probably on the TSXV or the TSX versus the OTCQB that doesn't have the volumes that TSX has.
So in summary, would like to get your stock pick of this year. Obviously, you cannot pick G mining and Montage. So what would be the next Montage Gold or the next G mining, possibly? Give me one pick.
Thesis Gold. The ticker is TAU. It's led by Ewan Webster. They have around 5 million ounces gold equivalent in central BC. The delta between price and value is just about as good as it gets. That quantity of gold and silver again separates them from a lot of the other developers. And for the reason, I think, because there was a merger between Benchmark and Thesis just over a year ago, I think that's what clouds the market's judgment on the value that's intrinsic to them. And I think that gap is going to close as more people find out about the story and as this gold price stays high. So Thesis is one I would definitely look at.
Thank you, Brian, for sharing your insights with us here today.
Well, thank you for having me.
Thank you for your time.